The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 15th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go take a look at the circumstance of these markets, what the buyers and the sellers, the bears and the bulls, or bulls and the bears, what they're communicating to you and us, to you and I, at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. And now it's not too soon to make those calls. So let's go ahead and get this show kicked off on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up about 25 points at 17,700. S&P's up 4 at 2079. NASDAQ Composite up 11 points at 48.55. Russell's up 8 at 11.56. DAX closed up 87 points. FTSE closed up 43. Gold unchanged. Silver basically unchanged. They're trading at 12.87 and 17.48 respectively. Late sweet crude is back 43 cents, trading at 48.06. Leading the charge here dollar-wise to the upside. You've got Priceline up 11 bucks. Tesla's up 6. Credit Corp up 5. Credit Acceptance Corp up 5. Public Storage up 4 bucks. PVH Corp up 4 to the downside. Perigo Company down $5.50. Allergan, it is back $4, a little almost 2%. Bob Evans Farms, the sauce getting squeezed out of the sausage. It's down 9% off $4. Chipotle down $3.60. Cray Inc., the computer guys, they're down about 10% off $3.40. Edward Life Sciences down about $3 buckaroonies. So now, I don't anticipate we're going to see much in the way of activity until maybe about an hour from now. David White gets to kick off the release of the Fed minutes, and then I think we've got Yellen that will come out and do her little speech. I don't know if it's Q&A, but so it's probably we have a good sense of well, we may have a good sense right away, but we probably have a good sense, a decent sense around 3:30. Certainly by today's close as to what the market wants to do. If I was going to go ahead and give you advice as far as what to be paying attention to, I'll just give you one thing that makes it real easy. I would say just pay attention to the price of $20.6975 inside the ES Mini. If, as we come into 4 o'clock, price is trading above that, it says don't be short. It says be long. If price is trading below that, it says don't be long. It's really as I can't make it any simpler than that. If it's trading right on it, it says neutral then, and that's what I would be. That's really what I would be looking at. So, that being said, we've got what equates to about 50 minutes just to kill out here. Now, there's not a lot of questions that have come in thus far. If you've got some, go ahead and post them inside the Tiger's Den, and I'll find something to talk about. In fact, I will answer one question, though I answer all questions, but there is a question that came in that asked me if I would give this a listener and a viewer that has more of a long-term outlook. They're managing their retirement assets or 401k, and they said, could I find the time? This actually came in a couple days ago. Asked me, could I find the time? And I say now is the time to go through the charts on a longer-term basis to give them a feel for what it is that I see out here. So this is a great opportune time to do that. So let's go ahead and kick that off. Let's take a look at some long-term views out here, and let's start with the S&P 500. Now, I will switch back between, if you're watching this on Tiger TV, I guess Tiger TV is going to be up in a couple of minutes. Why don't I just wait? Maybe Tom, give me the go-ahead that it's up. That way, because I don't know that this person has the Tiger's Den out there. Oh, it's up. Okay, perfect. Thank you. Okay, so I wanted to make sure that this person would be able to watch the replay of the show. So we'll switch back and forth between quarterly, monthly, daily type charts out here. But if you're watching this on Tiger TV, and I hope that you are, what you're going to see on my screen is you're going to see the S&P 500. We're just going to start with the S&P 500 and try to get its message. Now you'll see a yellow rectangle box. That yellow rectangle box says that price is still trying to get to the 2350-ish range out there. And you might say, how the Sam heck, it's okay to say that, can you come up with that? This little yellow rectangle box is nothing more than the consolidation pattern that was basically in place from 1997. So from 1997 through the time period of 2013, April of 2013, we in essence had a sideways consolidation move. Now, the cool thing about this pattern is that this pattern works on 1-minute charts, 5-minute charts, 10-minute charts, daily charts, weekly charts, quarterly charts. And this really is going to be quarterly and monthly, right? And weekly and the whole thing. It's just much easier to see on this quarterly basis. And the nice thing about a consolidation pattern is that once you break it, you then have what we call a measured move. Measured move says price should move equal to or greater than the consolidation. So all I need to do is just move that box really up to the top. I'm just using the top of the swing point from 2000 in order to get our measurement. So price could go higher than the 2350-ish or 2328, whatever it is that's measured out here. And no, AGI, I'm not an optimist out here. I am what you would call a pattern recognition trader. And what I do know, absolutely, with certainty, is that I like to trade patterns. And when a pattern, such as a consolidation, gets broken, until we see price break down back into that level, the consolidation pattern is in effect. And again, this is a long-term view. This doesn't tell me when it's going to take place. I'm not saying this takes place by this is June, by July, by August. This is just really chart patterns. Now, we don't have to believe this chart pattern as an example. Let's just simply go down and take a look at a monthly chart for the S&P 500. Let's go see what it's communicating to us. And let me go ahead. I'll turn off that rectangle box. We really don't need that. And the first thing that we can take a look at with regard to the S&P is that the swing point that it most recently generated as its high came in during the month of May. So we know that the low of that swing point is 2067.93 and the high 2134.72. Well, what we know right now is that price is still trading within that swing point. It was tested back here in March, tested, rejected in April, closed back above it in the month of May. We're still trading inside it. And as long as you trade inside that swing point, again, we're taking a look at a long-term picture, says you can go up and test the highs, whether it's with volume or without volume. So that says that the 2134.72 level is absolutely still in play. Now, we don't have to just stop right there. We can take a look at trend lines out here. Well, there's the top of it. But we can take a look at trend lines out here. Let's take a look at, from a monthly basis, what did the S&P 500, what has it done since that 2009 bottom out here? And we're going to go to break in just a second, but let's go ahead and take a look at that trend line and see where we're at, because the trend is always our friend out here. You can see the S&P 500, even on the move down in January, never got down to the bottom of the trend line. This is Steve Rhodes with TFNN. We'll get back. We're going to take a look at all of the other indices as well and see what they're communicating to you and I. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Long-term views of the markets out here. We started with the S&P 500, and the chart that we have on our screen right now happens to be the daily chart. Now, the red horizontal line that you're looking at across the top of the screen, that happens to be the bottom of the May 2015 swing point. Price is still trading within it. And interestingly enough, I don't know if it's a coincidence, but interestingly enough, the move lower yesterday was nothing more than a test of the bottom of that swing point. Thus far, a test and a rejection. Now, you've got a green diagonal line that is on my chart out here. That happens to be the trend line off of the lows here in February. And so it's been slightly broken. But if price, let's say the market responds positively to whatever the Fed has to say, and it doesn't have to be today. Again, this is a longer term that we're looking at. But if, in fact, today you're to see a positive response, then it says we go back up towards the highs and, and maybe beyond that as well out here. So long term, with regard to the S&P 500, for those that have got their long-term funds, there's nothing that has broken down. The S&P has not been able to break its rising trend line off of 2009, and it's still trading inside its all-time swing point high out here, which suggests that it goes ahead and tests the top of that. If we take a look at the quarterly, let's go ahead and put a quarterly up here again. Let's do this now for the Dow. So let's go put the Dow chart up on our screen. And what do we see inside the Dow? So inside the Dow, I don't really see, a consolidation pattern out here. Right? A consolidation would have been a test back here that would have tested the 2,000 highs and held it in check. So we don't really have a consolidation, on a quarterly basis. I'd say I put it on the monthly basis here. So let's do that. And on a monthly basis, if we take a look at the trend line here, right? So let's go back, same thing as we did for the S&P 500. If we take a look at its trend line out here, what we can see is that, the Dow is the first one to say, hey, I might want to go ahead and break my trend. In fact, it really did so back in January 2016. But price is back inside that trend line here. And price right now is traveling, looks like right at about the actual swing point high that it has from May of 2015. The low of that is 17,733.12. And we're trading at 17,704. So nothing here on the monthly chart that is really broken down significant or substantially. As long as there's a close this month inside 17,733, that says you can go test at 18,351 level. If we take a look at the daily chart here for the Dow, what we're going to see is that it's got a little bit of work to do, because just like on the longer-term trend line, it had broken through support of that trend line out here. It's really done the same here. Yesterday and the day before was a break of that little rising trend line, that little green line out here, but price is going to try to get back inside that area. Still nothing that is a significant breakdown as we see it right now. And if the market responds positively today to whatever Yellen, the bulls will actually take back control of the market. Why do I say that? Well, I say that because the advanced decline oscillator is just still slightly below zero. Sellers are in control. There's no question about it, whether it's the New York Stock Exchange, NASDAQ Composite, and the Dow. That's on a daily basis that we're taking a look at. But if on a daily basis we see the Dow respond positively, it will be the buyers that will have taken back control of the market. Let's take a look at the NDX 100. Let's do the same thing out here. This way let's do the SOX. Let's do the semiconductor index for those non-believers that the market can still go higher. Because if we take a look at the semiconductor, here's the quarterly chart, and you're going to see another diagonal box, rectangular box on diagonal. What's a diagonal box? A rectangular box on my screen. Now that yellow box area has a price projection now for the semiconductors up in the 909 level. Now, if you go from the swing point high, in the case of the semiconductors, it's 2,000. If you go from that high, just out of quick, and I'll show you how that rectangle was created. If you go from that high, January of 2000, down to the low in 2008, that's when the semiconductors made their low. Interestingly enough, that 905 area, that measured move, 100% move of the consolidation pattern is 905 as well. So, and you're trading above the 0.382 retracement level, which is 623. So it does look like we've got kind of a Doble-Gee confirmation out here. Now, as we take a look at and the question is, will this market move lower? The overall markets move lower with the semiconductors moving higher? Will they? Really? No, I don't think so. And if we take, here is the consolidation pattern out here. And so you can see that what the semiconductor index did, broke through it right here in January 2014, came back, tested it, rejected it in October of 2014, tested it, rejected it in July, tested it, and rejected it in January. This is a quarterly chart. It's quarterly chart that we're looking at out here. So on a monthly chart, it's going to look a tad different. But we've seen tests and rejections of the consolidation area. That's what you like to see when the market is communicating to you that it wants to move to higher price. Guess what? That is the message of the semiconductor index. If we go, I'll throw the monthly out here. Let's see if we can figure out. Here's the monthly swing point, by the way, which happens to be, hey, it's a very bearish candle out there. It's a bearish engulfing candle. And if you take a look at the semis out here, you're going to see the low 677.26. We're trading at 696 right now. So we're trading inside that level. If the semiconductor index ever gets above 751.21, that 900 level is really what you should keep your eye on. Why? Because old resistance, which should be the top on a monthly basis of this June session at 751.21, old resistance ought to become new support. And if we take a look at the daily chart here inside of the semiconductors, this most recent move down, now you talk about trend lines and the importance of a trend line out here, this most recent move down isn't anywhere near the rising trend line that's coming off of the February low. So the semis look extremely bullish to me. If we go take a look at the Dow transports, as one of our dinners AG posted here, something about the transports. I believe that the transports, he's a little bit maybe concerned about that. Now, inside the transports out here, let's see if we can get a decent picture. Let's again go to the monthly chart out here. And on a monthly chart, if we take a look at the transports, they too have not broken down. What the transports actually did during the January 2016 timeframe was came down and tested the rising trend line.
Right, that's off of the 2009 level. So the trend is your friend, if you believe that to be the case, and I do believe that to be the case. And the transports, which for all intents and purposes, which really broke down first, right? We started to see the transports. It made its high back in November 2014. And what the transports did in November 2014 until January of 2016 was they made a beeline to test that rising trend line out there. Tested it. In fact, that's when the Dow, found its footing. The Dow was able to actually break the trend line, but the transports, no. So at this stage of the game, are the transports out of the woods? I would say no. I would say there's a descending trend line, just off of the tops out here. If we try to go ahead and measure that, we'll go ahead and make that a nice little yellow line-ish type area. Transports still have some work to do, but at this stage of the game, on a daily basis out here, the transports, let's go take a look and see if we can find its trend line out here. Is this the daily chart? Can we do it off of the February lows? We're going to have to do it when we get back. But it looks to me like what the transports are actually doing is just creating a little consolidation pattern. And that consolidation pattern is really in between about the 8,100 level and the lows here from the May 13th, 2016 at 74.78. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 40, S&P is up 5, composite up 15. So we've been taking a look at long-term charts to really get a feel for what the markets are doing on a longer-term basis out here. That way we kind of eliminate a lot of the daily noise that goes on in the marketplace. We'll finish this off by taking a look at where we go, long-term view out here. Well, let's look at two other things, and then we'll go take a look at some other charts out here. I've got the NDX 100 up on my screen. You can see that what the NDX 100 is doing right now, it's trading in between its monthly swing point low and high, which is 40.49 to 48.16. It broke into that swing point back during the trading month of August in 2014. And it has remained inside that swing point ever since. So, you know, and it's a fairly large swing point. But nonetheless, it still resides inside that. If we take a look at the daily chart, it's got some work cut out for it. And it'll really send off some important signals along the way as it gets its way, as it works its way up to 48.16. Now, the first area, you can see also, by the way, coming off of the lows out here in February, you can see that the trend, that short-term trend, and it's a strong trend, is still in place out here. Now, that trend, by the way, is set off to the downside, was set off by this island reversal top that formed between April 13th and April 21st. That's the actual island. It's the day before each of those dates that I just gave you, before and after, that created the island out here. But if, in fact, we see a move above 45, 70, somewhere right around there, that is going to say that price is going to go visit the next island, which was December in 2015. Once above the high of about 4,700, then 48.16 is in the cards. But everything looks pretty good here. And last but not least out here, let's put this, I think, on a monthly basis. Let me see if that's the chart. We'll just take, because the financials I see in CNBC, they keep hammering the financials out here. But if you want to take a look at what it's doing, what it has done, what it did back here in February when Jamie Dimon went ahead and bought shares of his own company out here. Apparently he is a technical trader, because when he bought, this is the longer term picture of the XLF, you can see that it was really right out at the bottom of the trend line of the XLF. That's the trend line coming off the 2009 low, then to the October 2011 low, which, by the way, price in August of 2015 stopped right there. And Jamie Dimon must have been looking at this and said, I know where prices are going to stop. And of course, if you take a look at JP Morgan, just simply his deal created that nice little island bottom pattern out here. You can see its trend line, that's long-term trend line. Price didn't make it down there. I think he was looking at the overall financials. Here is that most bullish pattern inside of JP Morgan. That is the island bottom. That is an abandoned baby down there. And I mean, abandoned and probably not going to be seen for some time to come. We'll know if that's the case if we can see price get above and finish getting above the low of the December 31st candle session. That low, by the way, $66 even, Steven. So far, that area has acted as resistance. Now, one other thing that says that this is really possible out here, there's many things, but one other thing, you know, we like to take it. There are some folks, you've probably heard some of these folks, who will talk about the New York Stock Exchange, which they should. And one of the patterns that they will talk about is they'll say, hey, look, the Dow Jones, which happens to be the bottom of my chart out here, the Dow Jones is making higher highs, but we're not getting that confirmation inside the New York Stock Exchange because it's making lower highs. Have you ever heard anyone talk? You hear most everyone. I watched somebody come on CNBC and Bloomberg within the last 3 or 4 days that were talking about this, that, hey, New York Stock Exchange is struggling. You know, it isn't anywhere near its highs in 2015, you know, and all I wanted to do, if we had that ability, we had that 3D thing, I just wanted to be able to reach through the screen and pat that person on the shoulder, put my arm around that person, bring them in and say, well, let's actually take a look at the charts, because to the extent that you believe, which you should, by the way, that when the Dow is making higher highs, the bottom portion of my chart here, you know, the green line's going to the upside and the New York Stock Exchange is not confirming that, it is a signal, an absolute signal, that there is trouble in River City, especially if you are completing a pattern. But folks, what was just recently done out here on June 8th is a New York Stock, it works just the opposite. That's the whole key. That's why I would put my arm around that person, or both arms. I wouldn't give them a hug, so to speak, because let's keep this. I would put my arm around them to say, hey, come here.
Let's look at the screen out here. Let's take a look at these patterns because you see it works just the opposite. And what's the opposite? Well, the New York Stock Exchange made a higher closing high. When you see a line chart on my screen out there, what that is, that's the close of the session. So it made a higher high, higher closing high back on June 8th versus the one on April 27th. And guess what? The Dow didn't, right? What does that mean? Who's in control? If you believe it's the New York Stock Exchange that's in control of the Dow when you see these diverging patterns, then what conclusion would you draw here? Yeah, I hope that the conclusion that you draw is either I'm never going to use that pattern again. I wish you hadn't shown that to me, Steve, or you're just going to ignore it, or you're going to say, hey, geez, after taking a look at the long-term patterns out there, you might have a point. Only time will tell. But that's what I believe are the chart views, the longer-term picture, and there's perhaps the most important divergent chart inside of the markets. Have a request to go take a look at the ETF for coffee. I believe that is Java out there. But first, what we should look at, JO is the ticker symbol. What we should first look at, though, let me put it in right here. What we should first look at is what's going on inside the coffee contract. But JO, as we take a look at it, let's just look at this first here. Trading out right now at 21.14. The underlying instrument being the, I don't know, it's probably 2 coffee contracts. Maybe it's more, but it's probably the current month and then the following month out there. So you'd have to really go take a look at the holdings with inside this ETF. And then that is exchange traded note, not even an ETF out there. But then you would get a good feel as to what you should be looking at. But if we were just simply, if we did not look at the underlying instrument, what this would tell us is that the daily chart, that's what we're looking at, says that price may run into resistance, or really should run into resistance at the candle session from June the 9th. In that case there, you've got a nice old bearish engulfing candle. The high there is 21.88. You can see that at the price point of 19.84, that happens to be our TAS market profile high. That could act as resistance. Closing above both of those areas, again, 19.84 and 21.88, would be nice and bullish. Of course, that just sets off a test of getting back into the swing point area from August of 2015, and that's somewhere in the 23.40-ish area. Is there anything more that we have out here? If you were just looking at this exchange traded note, we'd be looking at March 22nd. That's your swing point for an A to B equals CD pattern. That swing had 149,000 shares, and it was crossed with 968. So would that say? That would say you could take a look at a price projection. I would do that if it was turned on my screen out here. Let's see if I can actually turn that on. And the answer is no, I have to actually add it. For some reason, the ABCD tool is not on there, but it is now. Now, as we take a look, your A point is down here on February 29th. Your B point is out here on a trading day of March 21st. Your C point, a fairly good size retracement down into May 30th. 1-to-1, A to B equals CD is almost exact where that candle session from June 9th hit. That's the resistance area, 21.88. You get above that, $23 becomes your next price target. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 41 points or 42 points. The S&P is up about 6. NASDAQ Composite up 15. Let's go take a look at some individual stocks out here, see what they're doing. Let's look at what's moving to the downside, see what's behind the move, volume or not. Perigo. PRGO is the first stock we'll take a look at, down with 5.7 million shares, and after a strong day yesterday. So if we take a look at yesterday, it had some pretty nice volume inside of this equity, had 8.3 million shares. Today's pulling back with volume as well, 5.7. I don't know what was the news out here. Chipotle mixing trade offers 45%. Yeah, 7. I don't know what is the deal out here. What's the shareholder notice? What do we have here? Investigating claims of potential misrepresentation by Perigo. So this is a real news related. Let's skip Perigo out here. Let's not spend any time really on that. Allergan, AGN. This is trading out at 240.34. Let's get a feel. Now, in this case, in this equity, you can see that it's got some real resistance right up here where price in essence stopped a couple of days ago, which is in the 249.60 level. It's really inside of the gap. It's not right now, but that's where it was trading. And it had a gap down, a fairly good gap down, by the way, that began on April the 5th. And it had 36 million shares behind that move. So it's a pretty decent supply line for those people that were trapped on April 4th between the 268 to 278 level out there. So it's going to really struggle to get above that area. But it's also just right now not doing much other than trading in a short term, about 4, 5, 6, 7 day trading area band. The support area on this is about 239.80, and the resistance level is about 249.60, and that is Allergan. AGN is the ticker symbol. Also to the downside, Bob Evans Farms. So 881,000 shares. That's pretty good volume, gapping down, and this thing is gapped down below all profiles, so we can turn those off and get a feel for where this may be headed to. I believe there's a high volume swing point, so that sticks out like a sore thumb. And that is taking you all the way back into the trading day of December 2nd, 2015. Now, the top of that swing point, which it has not hit, is 40.74. I'm sorry, wrong. The price point is 39.81. And that has volume there of 1 million shares, a little over 1 million, 1.08, and you've done 881,000 shares. So this thing is falling hard, very likely to go test the level between 36.56 and 39.81, and that is on Bob Evans Farms out there. Also to the downside, we've got Cray Computer, CRAY, down 9%. Now this happens to have a high volume high that happened just a few weeks ago, and so this thing is really consolidating. Take a look at this. Cray Computer back on the trading session here, October 30th, 2015, gaps up with 1.9 million shares. Big volume. This had another sign of strength out here volume-wise, but not price spread. Those are always interesting days. January 29th, 5.3 million shares behind the move out here. Nonetheless, you really did have a sign of strength eventually, and that was on February 16th. That one was wide price spread. It had some good volume, 2.4 million shares behind that move. And then somehow, some way, something let loose out here. And that something that let loose was a total of 4.1 million shares to the downside, gapping down, never getting down to the 2650 area. That's that first breakout level. So this thing could just simply be kind of consolidating between 2650, and right now you'd have to say the extent of that move could get halted around the 3840-ish type level. That's the top of it's really the low of May 3rd, what I call the top of the gap. That is ticker symbol CRAY. So those are some things moving to the downside. To the upside, we haven't really looked at Tesla too often, so let's go take a look at Tesla. It's not the leader dollar-wise, but it's up nearly 3%, up $5. See if there's really anything worth noting inside of this chart here, and probably the answer is no, not really. But let's go ahead and turn on our profiles. Let's see what that says. Well, interestingly enough, what this tells us is that Tesla is struggling. It's trying to get back inside its daily profile. It's trading inside it as we speak. Let me move my data box over here. It's easy for you to see if you're watching us on TigerTV. So it's inside the daily box, and then he closed above 217.99, offers the promise and hope that what price will do is go back and test its most recent swing point and try to get up to the 240.56 level, and that is what we see inside of Tesla, TSLA, as we speak right now. We've also got some other things here moving to the upside. Let's see, percentage-wise, what shows up on our screen as any kind of big mover out here. BioMarin Pharmaceuticals. Oh, let's go take a look at Nugget. That was down hard yesterday. Let's see what it's doing today. Well, I say down hard. It was down hard price-wise, I suppose, not necessarily huge in the way of volume. But yesterday, the move down in volume was 6 million shares, and today you're up with 2.5. So you have this little counter trend move inside of NUGT. Nonetheless, this one is more difficult for me to call at this stage here. I will say that let me do this on a different chart. Let me type in the symbol NUGT. That'll make it easier. What you're looking for if you are a bull inside of the Nugget while this thing loads. When it loads, I'll give you the exact price point to be looking at as far as a close, not necessarily a test and rejection out here, but it would truly be a close. And my other screen is not really helping. That's weird. So it's taken a while. When that happens, if it does happen in the next 12 minutes, I'll go ahead and give you that number out here. Here's what we know now, just simply in looking at this chart. Right now, you've got price that is testing the top of its weekly TAS market profile. So 102.13 is certainly a level that you'd like to see this close back above. There's no real damage at this stage done here, but if this were to close underneath 95.37, then you are likely looking at a move all the way, a pullback down to about 73.03. At 73.03, you've got your weekly point of control and the bottom of its daily box out there. So that's what the NUGT is communicating to you and I as we speak right now. Also to the upside out here, up 4%. Let's go take a look at Ralph Lauren. RL is the ticker symbol. Now, this thing might have had earnings or something on this trading session. I don't know what it was on the trading day of June 7th, but what a wild session that was. On June 7th, this thing gapped down hard, really. This thing had closed out the night before at 96.33. Probably an earnings release out here. And that very next morning, gaps down, opens up at 86.25. But what it did all day was it continued to claw itself higher. Now, there hasn't been the problem with Ralph Lauren is a little bit further on the left-hand side out here, and that is this huge, wide-ranging bar with major volume in it, 10.8 million shares to the downside. So Ralph Lauren has got its work cut out for it if it wants to get above 103.50 out there, and that again is ticker symbol RL. What else should we look at? Hey, let's go take a look at currencies. Let's look at currencies ahead of the FOMC minutes release. We're likely to see some movement there. Let's go take a quick peek at the euro. And we know inside the euro, we know price has fallen all the way back down to its rising price channel. Thus far, it's found support there. If it fails to hold here, heck, the euro could get all the way down to about the 108. But right now, it has found some legs. Steve Rhodes with TFNN. We'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally weighted performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We've got a request to go take a look at Slab, not marble slab, but Slab, Silicon Laboratories. And the question is opinion on a short. So as we take a look at the monthly chart out here, you can see what our listener, what our viewer is very likely looking at. If you look at this chart, you're going to see right around the $58 area. Has been strong resistance inside of this equity ever since October of 2003. I believe that that is nearly 13 years out here. So for 13 years, what what Silicon Laboratories has been unable to do is break above that $58 level. Now, one thing is for sure. If you see this equity get above 58 buckaroonies out here, that is telling you that there has been a change in trend out here. At this stage, it's printed out at 50.16. So the next element that our viewer might be looking at, I'll just put the weekly chart up on our screen, and we can see a descending trend line. So price, and that descending trend line, starting from the last time that the 58.16 area was hit, and I don't know that it's 58.16, by the way. I just kind of threw a horizontal line out there. But what we can see is the actual high on the week that began June 15 was 58.54. And then the next time on a retracement back up to that level, that took place the week that began December the 7th. And so you can see a nice descending trend line out here. And price just happened to hit it last week, I should say. It's a weekly chart that we're looking at. So if you are a trend setter out here, and you were going to find reason to go short, I can see what it is that you're looking at. If we put this on a daily chart, just try to assist us there and see what's happening from a daily standpoint. We'll put our profiles out there to assist you. You've got this one thing that is truly in your way, and that's called you had a bunch of buyers, and I don't really think that that was a climax high out here, and that's on the trading day of April the 28th. And there was 726,000 shares that traded hands as this equity pushed higher. And so this may struggle to get below that swing. You'd sure like to see it get below there, because then you got a lot of shareholders saying, now, what was I thinking on April the 28th? That low, by the way, would be 47.56. Right now, if this is able to get below, it's got a TAS daily profile. Let me reset that, make sure that it's accurate. The bottom of the box that you're looking for is 49.59. For it to get through that area. And if it does that, that says, hey, maybe you get 46.94 out there. So, Mitch, I hope that that assists you with what you are looking at. And that was for Silicon Laboratories, SLAB. So we've got, looks like the clock is on. Everybody is waiting with bated breath out here with regard to what Janet Yellen is going to publish in the Fed decision out here. I don't know what they're going to go ahead and tell us 2 minutes, 57 seconds from now. But I know one thing. Computers around the globe are going to be churning out data. Maybe we see some wild fluctuations. I think what we're going to see is the market move higher. We're going to see the VIX index just get crushed to the downside. But we'll know. I don't know if we'll know that in 2 minutes and 33 seconds. But you know what? If you stay tuned, our man, our polar bear, one and only polar bear, David White, he's going to go ahead and take you through that. Because it's Wonderful Wednesday, that means we got Tom O'Brien taking us home from 3 to 5. So, folks, thanks so much for being here, and have a great afternoon. And we'll be back with you tomorrow at, as David likes to say, same time, same station out there, something like that. So stay tuned. You want to make sure you stay tuned, because our man David White, he'll take you through what the market is communicating to us as far as what they think about Janet Yellen. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.